I would my best assessment is that the risks to our growth estimates stem predominantly from global factors.
Let me address the issue of capex. And you have outlined in the survey how the centre's capex has increased from a long average of 1.7% of GDP between 2009 to 2020 to 2.5% of GDP at this point in time. In the survey, you also talk about incipient visible signs of private capital formation. In that context, do you believe the heavy lifting which the government has done so far on capex will have to continue, or do you believe that we should possibly look at some sort of tapering there?
No, I think it is something that India has to do not on an either-or basis, but on an and basis. That is, the investment requirements for us to move from lower middle income to middle income category countries is to have investments coming both from the public and the private sector. So there is definitely, given the economic cycle and the context, one will dominate the other. For example, in the first decade, the private sector was willing to invest and invested quite a bit. And now in the last several years, given the stress in the banking and non-banking system and on the corporate balance sheets, the government took on the mantle of driving public investments and creating infrastructure. So I think whether these things moderate cyclically or expand cyclically will depend on the context. But there is room for both to happen.
Yeah, you also suggest that we are starting to see private sector capex picking up, and you believe that in a way that animal spirits that we've all been waiting for them to be unleashed, or possibly on the cusp of being unleashed. How confident do you feel on that, on the back of the fact that we are seeing double-digit credit growth at this point in time, as well as the repairing that we've seen of both corporate balance sheets as well as bank balance sheets, which you talk about extensively?
No, I pin my hopes on the fact that balance sheets are very important drivers, and so are current profitability trends, and both of them are pretty robust for the corporate sector to invest, and they have been investing. I mean, that is what we mentioned in the presentation and in the chapter as well, that investment growth by the private sector in the first half, investment rates were higher than they were in the first half of the last financial year. And there are signs that the foreign direct investment has also held up quite well. We must understand that despite the balance sheet improvement, the kind of immediate or instantaneous response on the investment front was held back because of global developments and shocks. And that is why I feel as and when the global shocks slowly recede or people get used to them and find ways of dealing with them or getting around them, then investment rates will start to pick up and we will begin to see them in the data.
I want to address the issue of fiscal